So the news of the moment is RBI action, the risk management measure which has been taken last evening by RBI for tightening the norms, weightages for personal loans and credit cards, and that caused a bit of a flutter early morning when we opened for trade as far as the financial market is concerned. But what is the larger objective behind it, and how is the sector taking this impact-wise? We have someone who understands this entire space extremely well. Running India's largest public sector bank is Dinesh Khara, who's joining us from London right now. Mr. Khara, thank you so much for accommodating. I'm sure a lot of funds you're meeting out there would also be wanting your opinion as much as, over here people are wanting to know your thoughts. This risk management measures which have been taken by RBI last evening, there were hints of it dropped in the bulletin and, other earlier public appearances of the governor. How do you read it? Is it a surprise?
No, I would say that perhaps it's a step in the right direction, considering the fact that there was a lot of concerns which were expressed by Honorable Governor relating to the kind of unsecured credit which was growing, and also the players who were extending that credit. So that is one of the reasons why perhaps this kind of measure was very much required. And I think we in the financial system, we were expecting something on the similar lines to really happen. So I would say that it is not merely the unsecured credit being extended by the banks and NBFCs, but also the NBFCs which borrow from the banking system. There is a recalibration of the risk weights, which has been directed by the Reserve Bank of India. So, which very clearly means that the capital allocation for supporting this kind of a asset class would actually go up. So if I take the example of State Bank of India, we have done some back of envelope calculation, and we expect that our capital requirement will perhaps go up by about 55 to 60 basis point if we reckon both our unsecured loan book and also the loans which we extended to NBFCs. So, but also while I say so, I also must mention that if we reckon our half-yearly profit, which we have already earned till now, that would have given the boost to the capital adequacy ratio by about 110 basis point. And as against that, this will involve additional consumption of about 55 to 60 basis point. That is what my sense is. So I think overall, we are not really impacted as much in terms of our ability to grow and support the book which we have. But yes, of course, there could be certain other entities which might experience some kind of a pressure as far as supporting this kind of book is concerned.
Mr. Khara, it's a free market, and each of the balance sheet will have different impact. But including yours, the public sector banks, and some of the I would say largely the banking system balance sheets right now currently are in shape they've never been in a very, very long time, quite adequately capitalized. Plus the outlook, if the requirement for further capital raises actually emerge, is also pretty good. Would you also consider some capital raise?
No,
it may not be immediately.
No, we have, in fact, we had a approval from our board for raising 81, which was in the normal course. We were planning to raise about 10,000 crore. We have already raised part of it in the current financial year, and that program is already on. So that will be there. It is not that it is caused essentially on account of this increase in risk weight, but it was in the normal course we had planned it out. So I would say that it has not really certainly triggered any such action on our part. But yes, of course, we were quite cognizant of this fact that perhaps we might be required to provide for a little more capital. And as I mentioned, that it is much what we had expected. So we were all prepared for it.
Mr. Khara, I also want to understand, please allow me liberty to ask you on one of your subsidiaries, the impact, because credit card is also where the risk weightages have been raised. And this particular entity in particular, at least one or two last few quarters have come under bit pressure because of spends were okay, but, delinquencies and receivables came a bit under pressure. At least the street saw it and the stock was under pressure. But with this additional risk weightage, how much disruption does it cause to SBI Card's business model?
Actually, there also our capital adequacy ratio is 22% plus, whereas the prescribed by the regulator is about 15%. So even if we reckon the impact of this higher risk weightage, I expect that it will consume about little more than 400 basis point for the kind of book which they are having. So it would still be about 17% plus in terms of the capital adequacy ratio, which will be much more than what the regulatory prescription is. So there also we are quite open in terms of raising the resources through tier 1 or tier 2. So the board will be taking appropriate calls, and we don't envisage any kind of a challenge for the SBI card. And as far as the quality of the book is concerned, adequate steps have been taken by the company to address the quality related concerns and to ensure that the book stays insulated from any shocks as far as the credit quality is concerned.
Follow up, because of this decision of RBI and then following decision by the impacted entities, be it on the banking side which have their exposure, or even NBFCs, do you think consumer loan in particular, that segment will get repriced higher and that could also dent a lot of demand?
See, the point is that the major demand drivers are essentially those which are like home loans, education loan, gold loan. So these are the entities, and even MFIs also. So these are the entities which have been kept out of it. So I expect that these are the major entities which are into asset creation, and also it is also a chunky demand for these kind of loans. So I think to that extent, there would be some impact, but not as significant, which should be a cause of worry. I would say that in many respects, it will probably avoid any kind of a liberal spending, which perhaps people would have taken, where people could have challenged in terms of repayment. So I would say that it will ensure the healthier growth of the demand and also of the economy too.
Yes, Mr. Khara, I would agree with you. I mean, the way the choice of the sector which were excluded, very prudent of our central bank, and no wonder why they are the most admired globally. One last question I'd like to ask you about credit growth in the system overall. You have, benefited from it. You've demonstrated capturing the credit growth very well at SBI as well. What is your outlook from here on, getting senses from the festive season demand and then beyond it as well, next 6 to 8 months? Are you sticking with your estimate of credit growth in the system, and how much SBI would participate in that, or do you upgrade it?
We expect the credit growth to be around 14%. That is what our expectation is.
All right, Mr. Khara, we'll let you go on that one. Thanks so much for your time this afternoon and morning over there. Have a good roadshow. I understand you're having a non-deal roadshow there, but we'll see you soon when you're back here in India.